Yeah. Hey, I want to just hit, if I can. I said we were going to take a look at the um, weekend. There were some things that I highlighted on each page that really jumped out at me that I wanted to make sure that I talked to you about. We're 2 hours into this, but this will take me about 10 minutes to do maximum.
Yeah,
So,
thank you. I
so
noticed that and I was wondering, 'cause,
yeah,
yeah.
yeah. So these were things that I put in there to make sure I remember to say to you. Now, if I wasn't going to be in here with you guys today, I wouldn't have done that because I just get tired too easily. So there you are. The first thing I notice is this risk off. Um, because we're below the zero line. But I also notice this, and this was leg one, and that was leg two. So this was a really strong recovery. And so we're at a critical state. This thing can go this way. If this collapses, that could lead to minus 8% in the S&P. I also notice um, that this recovery was so good that nothing in the 10 indexes has fallen below their 4-month moving average. So the BMR and the ETF2 still is favoring the upside. That makes this a buy on dip opportunity and short on failure. This is massive critical state because long term we're still strong. Short term, we're still in pretty good shape above the average line, and we're just in bullish normal. But this risk Z is early warning against complacency here and against complacency here and against complacency down here. Okay. So this is my early warning. That's what this does for me. Check or hold.
Check.
Check.
Yeah. Mhm.
And I notice that in spite of that 30% sell off, that these are the holdings in February. And what I notice is Latin America, emerging markets, US small caps on the ETF 13, ETF 22, Latin America, energy, emerging markets, no primary US in there at all. Silver, gold, Latin America. Winners: Intel, Google, Caterpillar, Johnson and Johnson, and Goldman. None of the tech bros. Old school tech, and then industrial cat. Good to know. Mexico is the strength of Latin America. Metals and mining. South Korea. Chile. So that's what I'm noticing off of page one. Page two. The RLFF compression. So these are daily charts. RL 270 purple, RL90 has come to a conversion point. Longer term is weakening because the RL90 is up, but it's starting to roll over. RL270 is the longest and strongest. RL30 compression, and it's in an owl and starting to roll down. RL10 rising lows, and everything is tightly clustered at the SMA 30. That is a super pinch, compound critical state. So the maximum potential for explosive moves out of this in any direction. And to me, the SMA 30 is the boundary point at about 685. 685 is short. That's hugely important. That's check or hold on that.
Check.
This is 3-day and 9 days. So it gives you zoom out a little bit. There is your rising PSARs. That's the other side of the dragon. This is a 30-day SMA on 3-bar, so it's like a 90-day SMA. And they both agree 685 is the short move. And target would be this 670 from here, followed by that. So that's your downside. Now, on the 9-day, what I want you to notice that there was a little bit of sideways here, but then it broke out. But then you get an outside day, which recovered a little bit. But the fact that this is starting to expand says that the upside did not expand. The downside expanded. That also says a breakdown below 680 would be crucial. And then your SMA 30 is here, way back at 6. That's at 630. So by every measure, compound critical state, 685 and 680 are key price levels, but 630 is in play. If 630 breaks, then the long-term upward trend is finally broken, and then it's Katie bar the door. This is about 700. A 10% correction is 630. A 20% bear is 560. God, this lag is slow. It's like 5 seconds slow. Yeah. So that's sort of a quick look at the longer term trade using these indicators from the weekend. That should be a 560. So 700, 630, 560. That's your 20% envelope. Check or hold?
Check.
Good.
God, it's so slow. All right, next one. That's, again, this is daily chart, but a wider look. This goes back about 200 or 250 days. Just to put into context what the last 150 looks like. That's why that thing, this is the moving 150 regression line right here. That's why that is here. This is your 30-day box. This is your 10-day box. This was the bottom of the Trump dump. This was when Trump got inaugurated. That was his negative. That was the recovery. And then the continuity is slowing down. So again, Luis, your observation about if this was the straight line move, most of it happened early in the first third. So you get paid by being able to take the heat a little bit in here, typically. And then learning how to know when you're in the grind. Normal pullback to the support level, a second grind, but now we are in severe danger because it's been this long without a new high. It's been 30 days. It's been 30 days without a new high. And what is the source of strength? It's all tapped out. And the orange monkey is falling apart. Whoops. I hit the go to the last instead of the next. This one zooms in on just the last 30 days. And the things that I would highlight is this is where the PSAR dots of the that are geared to the SMA 30, that hasn't triggered yet, but it's close. This is where the RL10 PSAR flipped and flipped and flipped. So there is a tentative long position in here where you say all it's got to happen is that this support level has got to hold, but that's at 685. If 685 holds, then we have that potential. Let me let the drawing catch back up. So if 685 holds, that could be a buy on dip opportunity. And here was Friday is the yellow box. Friday is the yellow box. And this is the price. So we got about a 1% cushion from 692 to 685. So all it has to do is break above the green line. And what were you worried about? But as we just showed, if it broke below 685, you got real reasons to be worried here, all the way down to here. So that's what makes this a critical state. Check or hold?
Check.
This same thing just zooms in on the 30-minute, and no need to repeat myself other than to say that's how important 685 is. That's the 5-day low. It's below the 30 period anchored VWAP and the 10 period anchored VWAP. 685 is a serious support level. If that fails, it goes to 675 fast. This is looking at the BMR stuff now. I thought I had put some red boxes in here. Maybe I didn't. Shit, I did it again. Sorry. Hit the wrong button. I would have zoomed ahead to this one. So this, or no, I guess. Why aren't those boxes showing? I don't know. But Yeah, silver, but yeah, clean energy got murdered, but this was pretty good. That tells you silver is in play. It's just a special case. I'm also interested longer term on the recovery in real estate as an alternative to equities. Oil, oil energy sector, huge. So we will see energy as a has been way outperforming as a swing trade here. Now the Dow 30, I want to draw attention to Intel, Google. Those are the only two tech bros that are in there. The other four that are dominating, the dominators, Caterpillar, Johnson and Johnson, Goldman, and Walmart. That's Main Street. That's not the tech bros. Energy, Chevron. How much of that? How much is left though? Energy oscillates hard, but is tightly constrained. Uh, Tesla, a tech bro, below his 4 month moving average, and has just been murdered for the last 3 months. Although his 6 month is great, the last 3 months have been just terrible. Boeing has been doing pretty good 1 month and 3 months, but got slaughtered this week when that idiot monkey announced he was going to start doing tariffs on Canadian airlines, which means that Boeing is going to suffer because they'll put a reciprocal tariff on, and nobody's going to buy Boeing because everybody else's airplanes, the U.S. is putting a tariff on. So nobody's going to buy airplanes. And that means Boeing is getting murdered. Now, United Health, Palantir, and Microsoft, who wants to own Microsoft? Everybody, every long-term hedge fund and mutual fund manager, Microsoft is in play after shitty earnings. By any measure, you can gauge how much buying on dips there are by Microsoft as the poster boy for buying long-term quality on sale. Palantir for short-term quality on sale. And then United Health got slaughtered because of a policy change in covering insurance claims in favor of in favor of pharmaceutical companies. So United Health's margins just got squeezed, and long term there may be a buy on dip. So those are the things that I'm looking at. Verizon is the one anomaly I haven't talked about. That there's a fire there. I wonder what's going on. Don't know. Honeywell is a tech industrial that is above average 3 month, is great 1 month, and it's still above average 1 week. I think Honeywell is a buy on continuation. So continued strength in Honeywell is a potential for my longer term posturing. Does that make sense? So what I'm doing is making notes for the different portfolios that I'm managing and the different time frames. This comes out of the blended monthly rebalancing piece, a slightly different lens. And I'm going to notice this goes from 1 to 183 of the most liquid ones. And this is based, again, on the blend. It's based on this one, the blend of 3 month and 6 month. So silver, no surprise, has a nice blend and a nice, it's still up 10% for the month, but got slaughtered. And silver has been much better than his gold counterpart. So then the next best thing is two international countries. Both have been dominating on the 12-month or the blend, the 3 month, 6 month, 1 month. But Chile got smashed this week, but Korea was huge up. So Korea, there's something going on in Korea. And if I look at the shift away from the US towards internationals and I start reading down, South Korea, yes. Uh, Brazil, yes. Austria, yes. Looking for Mexico in there. Mexico, not as good as Brazil. And now the other thing I'm reading, as I start reading down, where is the first U.S. index that I see? Nothing until I get to the energy sector. Energy sector. So none of the mainstream U.S. indexes even made it into the top 30. So that tells you how much the U.S. is lagging all the internationals. Oh, there's South Africa. Oh, there's Mexico, Spain, Malaysia, Brazil, Chile, and South Korea. So those are the things that are standing out to me on the macro trade and the global regional trade. Make sense? Not so useful for an intraday guy, except maybe the energy piece. But if you have longer term investments, that's where it starts building the narrative. Clear. Yeah, I notice on this one that all 10 of the prime indexes are above their 4 month moving average. But the global 21 is better than the US at 16. I noticed that in the S&P spiders, there's weakness in finance, tech, and utilities. So that's the first place the US is crumbling. I noticed that in the broad asset classes, the precious metals are kicking the crap out of everything, and treasuries are lagging on a capital gain basis, but that means yields are going up. So if I'm interested in bond interest income, that may be where I need to be looking. Check or hold?
Check.
This one is the weekly ETF2. It is also based on relative strength. It looks at relative strength, the consistency of that relative strength over the last 10 weeks. And then this is the system quality number for 40 weeks, scaled 1 to 100, and then color coded green, above average, below average, red for bad. And this is another way to look at that long-term stuff that we just saw, but it uses a slower frame of reference and different calculations, so it's independent confirmation. And what sticks out at me is South Korea is green across the board. Green across the board means it's great, that I should be ready to buy breakouts to the upsides and reinforce the trend following. And all it means is that winners are winning. They're continuing to win. And I could do turbo inside with that. I'm interested in Brazil and Latin America because they are white on consistency, but green on strength, meaning that it's this one, white on consistency, meaning it was good, but now it's green on current, meaning it's now great. That's accelerating strength. Check or hold. It's above average strong, but accelerating. That's the next leaders.
Okay. Hmm.
And then et cetera, all the way down. I just noticed emerging markets have an abnormally small volatility, which, when combining with above average gains, is what gives it an exceptional system quality number. And the same thing with Canada. So Canada is a short term, it's white on consistency. No, correction. Yeah, white on consistency, yellow on strength. I'm going to watch for resumption and I'm going to watch for new momentum. So Canada is especially with the political moves and economic moves, that's becoming a legitimate alternative and has a lot more room to gain. Plus, you saw my little snapshot of that yesterday, why it is now starting to accelerate out of consolidation. And then I just noticed that the international equities, they have short-term momentum, but they're still under average on the longer term. That means that there's a lot of room still to go before it could become the dominant world leader. So I still feel like it's early days in the shift to energy or to the internationals. On the ETF liquidity, this just shows you the anomaly um, of how volatile. Look, gold is 2.5 times, actually 3.5 times more volatile than the market, and silver is 3 times as volatile as gold. And the amount of trading transactions just in the ETFs is enormous. Gold miners and semiconductors, a lot of volume and tradable. The gold trust is an alternative gold. Um, Brazil is very tradable, as is the biotech index. So I'm looking for energy is very tradable at one point. Anything that's above average on volatility and is on this list is both liquid and volatile. What's interesting to note is that the volatility of those other international instruments and the commodities is so great that even the Qs have below average volatility. Kind of interesting. The small caps are more volatile than the Qs and very liquid. So that just gives me insights into the tradability on a regular basis of the most liquid ETFs. Check or hold?
Yep.
All
Check.
right. All right. That's everything I wanted to say about the weekly. Um, we've seen the next two pages come from the ETF2, but we've seen the extract of that already, the endpoints. So now if I just zoom in on the daily, you saw this sniper trade of the day. This was the ZSL trade. This is double short silver. And in the morning, as that thing was collapsing, I could get entries at $2, 220, 230, and 240, and sold it all at 265 uh, a short while later. That was about 15R on the intraday silver trade. And sometimes I find it easier to trade up and to the right. But that's the same thing as being short AGQ, but you don't have to worry about being able to borrow shares in AGQ. You can just buy shares in ZSL. So rather than going short a double leverage ETF, I'd rather just take the long, the inverse. We've seen we've seen those already. Whoops. The extra thing that I'm noticing on this, again, I'm just going to highlight critical state, overbought, buy on dip opportunity in uh, overreaction on the Russell. And then on the channeling, the mid caps and the small caps have moved back to the bottom 20% uh, on their 10-day look back. So they're weak enough to buy, whereas the S&P has not yet, and the Qs have not yet gone into. So these have been weaker. And that's an automatic buy at the open if you're following the mechanical rules. So my point is, even though I've spent 90% of my time talking about the danger in here, it comes with the fact that there's guys that are ready to buy on dips, which is why it becomes an interesting trade and a volatile trade because you got people that are committed on both sides. Check or hold?
Check.
I would also notice that I don't spend much time ever talking about pivot points, but in the S&P, you'll note that S2, 684, that's close to that 685. That if those two were to break, that would really signal a major downside move. Anything north of about 684 is still kind of the intraday trade. But S2 in pivot points is where you start recognizing challenges to the price structure. Uh, clear drawings. I'm going to try to go through these a little faster for you. ADX, that's a secondary chart for me. I'm just looking at extremes on strength of trend. Silver was a 2 sigma Z score on his ADX. So the ones that are in the bottom are really choppy and no trend at all. Microsoft is down in there, I believe. And I think, why is it daily? Let's see. Yeah. All right. So this is the Z score. The 1 day move on the S&P was not an exaggerated move. Like it had it moved, its range was like 0.3%. I'm sorry, its net move was 0.3%. And that's only a zero point 0.3 Z score. So nothing unusual. What really stands out is that energy, if you look at the Z score of his moves, energy has had an exceptional move. The strength in the globals is all above average compared to the S&P. So I look at EFA versus SPY. The globals are just better on every time frame, and that is a signal of shifting. People are moving away from the US and taking positions in the globals. That's just a fact. Then these are your tech bros right here, and they're all getting the shit kicked out of them, especially Palantir on a relative basis. Devon Energy is doing well in the same way that energy, US energy, is doing well. Regional banks are doing well compared to uh, the US. But all these other things in here, International Paper, Alcoa, Marijuana ETF, Advanced Micro, all the US companies are getting smoked. So this just helps me with seeing the global strength, reinforces the strength in energy, and it reinforces that the US is not in a panic mode yet, but it won't take much. That means I read that as complacency. And so if we saw a move below 685, that tells me I want to be ready for that. The lag is getting worse. I'm sorry. Sorry about that. The rest of these charts are really just the restatement of the daily patterns and daily statistics. Not much more to gather from that. Um, so I'm going to fast forward to just where is my favorites? This is the one here. All right, so this chart looks at the range stat percentage. Oh, the range percentage, I should say. And what this one does is that is the that is the uh, range stat, which is the average range of the last 30 days plus a standard deviation divided by price. That's the size of the maximum reasonable intraday move. So it's not unusual for Rigetti to move 14% of its price. And you combine that with the consistency of the frog quality number, that tells you how reliable is that large move. When you multiply those two together, 2.7 times 14 and a quarter, you get a value of 38.21. And if you do that for all 40 of these, the ones that are in green are significantly higher trading value than the ones that are above average and then the ones that are below average. So this is where my reliable big movers comes from. And you'll notice that I spend a lot of time trading these top 10. This one describes how to calculate that, but that's sort of like my favorite recent volatile large volume favorites. Check or hold?
Check. Quick comment in that regard,
Yeah.
and that I had an idea the other day. I don't know how to backtest it or search for it, but a stock with a large R stat or a good FQN number,
Yeah.
there might be a way to find which ones um what am I trying to say? Which ones trend the most from
Direct.
high to low?
Yes. Yes.
Meaning
Yeah. Yeah.
how
So
many? Go ahead.
yeah. What it'll tell you is if you look at the column that did range stat,
Mm-hmm.
I'm sorry, range divided by range stat, it tells you if it made a move bigger than a range stat. That's that's key. The other thing that we care about is signal to noise ratio,
Correct.
right? So let's say that we have again with the leg. Half a second. Here we go. So if I had an entry at the low of the day and an exit at the high of the day, then the high minus the low is the range, and that is 100% signal. There's no tail, right? But if I opened here and then went to the high and the low the same day, but then came back and closed at exactly where it opened, those are the two extreme cases. You can see that the bar on the left at A is all signal and no noise, and B is all noise and no signal. Check or hold. Now, the good news is that they both made a range stat move. The good news from on this one is that if you, especially if that was a gap and you had your little R5 bracket around it, you ended up getting a directional move with a single trade that lasted all day or whatever that was, right? If you put the same bracket on this guy,
If you're drawing something, Ken, we're not. That's
yeah,
not showing up on the screen.
it's taken a long time to get
Yeah.
there.
I see it on the left.
Yeah, it maybe reduce the scale of your view because it's off the chart, but in the spare area.
Got it. I was covering it. Yeah.
Yeah, yeah. So the first bar, the first daily bar, um, opened at the low, moved to range stat, and then closed. That's all signal and no noise. So if you bracket the open, you get one good trade that lasts all day, right? At B, he opens, you have your little bracket. Stand by. Still with the leg. No. All right. It opens. It might have gone up to the high, so you end up getting that trade. It comes over. You took your keep 70%, right? And then maybe as it's after you keep 70%, you're still stalking for the COTA 2. You're hoping for a COTA 2 in here. So you don't get any of the short move. But maybe when it breaks below, the low of the day or something, you end up getting a short. So you end up getting a range stat move in your direction, but it's split up over a couple different trades, right? So one of the things that we might care about is what is the characteristic move of that particular symbol. What I want to do is, if I look on my the charts that show signal to noise, I go back 30 days and I say, this is a candle that is mostly signal and a little bit noise. And oh, actually, I have a chart that shows that. Hold on. Shoot. Now we're starting to get into the weeds a little bit too much here. Sorry about that. But um, if I look at, let's see, signal to noise ratio, I can tell you that Chevron has a signal to noise ratio of 0.41. That means on average, its tails are bigger than the real body. So it has a tendency to jump around a lot during the day. But if I look at, let's see, the strongest one in there is probably Alcoa. Alcoa has a 0.56. So Alcoa, on average, has a real body bigger than the tails. And that means it has a larger directional move net from open to close. Whereas Chevron has a lot more backing and filling. So, all other things being equal, I want things that trade that have a high signal to noise ratio. All right. I think it's easier to see on the ETFs. We're going to see and this is going to get to your back test question. If we run the same kind of back test uh, for all the symbols, we might find that when I look at the signal to noise ratio here, that SPY is 0.46, IWM 0.47. There's other symbols like oil, 0.52, and emerging markets, 0.8. Oh, no, 0.63. The emerging markets have a much larger intraday directional move. And so I might prefer them, all other things being equal. The ETFs tend to converge a little bit more. Individual stocks have wider characteristic signal to noise ratios. And what we care about is I'd like to see things that sell off and then give me a long, smooth move, as opposed to things that are like this, slowly backing and filling, where I'm getting a lot of trades, but smaller follow through. High volume traders in broad indexes like the S&P tend to have this kind of backing and filling at smaller steps. This kind of straight directional move tends to be the international ETFs and then mid cap or small cap story stocks. Because once the buyers take charge, everybody's buying. And then once the sellers take charge, everybody's selling. Because there's only one reason